I'm Alan Kenny, Editorial Director with REIT.com, and I'm at REITWeek 2013 in Chicago. Joining me is Jeff Schwartz, Chairman of Global Logistic Properties. Jeff, we've seen a ton of activity in the first 6 months of the year in Asia. What's driving all that?
Well, Alan, we're focused today in Asia on China and Japan, have a #1 market position in both countries. In China today, we're the size of our next 9 competitors combined. It's early in the process, but significant lead from a market share standpoint. But you look at China, for instance, it's got 1/14 the amount of distribution space per capita the US has today. Massive shortage, and out of that 1/14, we estimate that more than 80% of the space that exists today is completely, totally, functionally obsolete. So significant shortage of space, fast-growing economy. The economy is still growing at 8% per annum. People talk about slowing at China. It kind of makes you chuckle because the rest of the world would kill for 8% growth. There's not another country in the world that's growing at 50% the rate that China is. And even more than that, it's really retail sales that drive the domestic consumption component, and 82% of our space is focused on domestic consumption. Retail sales are growing at 14%, actually 13.9% this year, estimated to be 14.5% next year. So fast growth in domestic consumption. We're leasing up space within our domestic consumption-oriented portfolio, which is 82% of our total space, exclusive of the port-related space. We're 96% leased. And as we build space, it's leasing up ahead of pro forma. It's tremendous demand. It's tremendously exciting. In Japan, the economy is, sentiment has gone a lot better since Abenomics started. We've actually seen customer inquiries up 50% since mid-December. That's inquiries. Can't translate it to leasing because we're already 99% leased before that started. So we didn't have anything to sell, but we're seeing a lot more customer demand. We estimate that far less than 5% of the total space in what's the 3rd largest economy in the world is what we consider modern or efficient logistics space. So it's still a long way to go in building that out. Great market opportunity, very profitable, very strong business. We've got a great team in both markets, and it's exciting.
One of the big deals, of course, was your spinoff of GLP REIT in the last 6 months or so. Can you give us a little bit of an idea what was behind the thinking there?
Alan, if you go back and even look at our prospectus, and when we went public in October 2010, we talked then about doing a J-REIT, and it was part of our business plan to create a vehicle within Japan that allowed us to transfer assets, to take that capital out of stabilized assets in Japan and invest it in higher yielding developments in Japan as well as in China, where we have massive growth. We listed 12/21. It was December 21st last year. It was the largest J-REIT IPO ever in Japan, and actually the largest real estate IPO ever in Japan at over $2.6 billion US. Been very, very successful. We were 4 times oversubscribed, went public at 61,200 yen per share. Even after the market correction in the last week, we're still about 87,000 yen per share. So it's traded up almost 50%, and it's been very, very exciting for our team.
Lastly, let's talk China. Next 5 to 10 years, what are the big plans there for your company?
Well, in China, again, if we categorize or catalog our customer demand across the 33 cities we're in, we have over 75 million square feet of customer demand. Our development starts last year were about 23 million square feet, hence why they, at completion, were leased up far ahead of pro forma, as well at the 6-month mark and the 12-month mark, the buildings that we're building. Very exciting, shortage of space. We can only build as fast as we can scale the organization. We have 530, 550 people on the ground now. Tremendously talented young team. Ming and I, my partner, are very proud, very excited about the team we're building, about the things we're doing there. It's an exciting opportunity. And what even makes it, you have retail sales growing at 13.9%. What gets even more exciting, not that 14% growth isn't good enough, e-commerce is growing at 100% per annum for the last 4 years, and is expected to grow at that same rate in the coming 3 years. Obviously, it can't grow at 100% forever. Take over the entire world. But that being said, it's expected that e-commerce sales in China outstrip that of the US sometime in the next 12 months. China is it's as if they just skipped over the entire phase of going to neighborhood shopping centers and go right to e-commerce. Just like within telephony, they skipped over the fixed line stage, and most Consumers in China never had a fixed line. They went right to mobile phones. It's the largest mobile phone market in the world. It'll be the largest e-commerce market in the world. E-commerce has gone from 3% of our customer base just 3 years ago to 20%. 3 years later, at the same time, we've expanded our portfolio significantly. We expect that to continue growing. Effectively, we are the storefront for e-commerce, and that's an exciting opportunity.
Interesting times. Thanks a lot, Jeff.
Thank you.
And for more on this and other REIT news and analysis from REITweek 2013, be sure to check out REIT.com.